much, just because when we have discussions, it was easy to reference, because he'd always have those things that he would put
Yeah.
on the webpage.
Yeah.
I'm so over, I can tell you.
All right, kind of getting going here. Let's take a look at just a couple things, and then I told you guys I'd turn you loose and let you get in your groups and maybe start making some decisions, because they are going to be due Tuesday. Your full first round, practice round decisions will be due on Tuesday. I think I set it up, I gave you a little leeway. I think I set it up for like noon on Tuesday or something. But it probably says 2, because remember I said everything's Eastern Standard Time, or Eastern. Are we in Standard Time or Daylight Time? We're in Standard Time now. Daylight Time was in the summer. So anyhow, you'll get those done. Then I'll process the round Tuesday afternoon and make up your assignment and whatnot for Thursday, and then we'll talk about the round on Thursday, et cetera, et cetera. But I wanted just a couple more things to kind of hit. This results assessment, there's PowerPoint there, and you guys can kind of look through it. There's a lot of this I'm just going to skip through. I better turn my projector on so you guys can see it. But some of it just serves as reminders of a couple other things I do want to talk about, so I will. Give me a second here. And then I'm gonna open up the Capstone Courier. You guys probably, if you had Kevin's class, you kind of know what the Courier was. It called Foundation Courier then, or whatever. So you kind of have an idea what it looks like, but I'll probably spend just a few minutes and kind of go through that and show you some of the things that I really find important that you guys may want to spend some time concentrating on. So, okay, I don't use any of their stuff. I shouldn't say that. I don't use any of their things for scorekeeping. Did I show you guys my score sheet? I got some people nodding and some people shaking their heads, so. Okay, yeah, if I get a minute, I'll maybe pop it up again just real quickly. I thought I did, so. These are important though. The Capstone Courier. You're gonna live with the Capstone Courier, probably to a little lesser extent your annual reports. The difference is on the Capstone Courier, you get to see things from all the teams, right? You get to see the whole industry and how it's doing. Your annual report's going to be specific to you. Okay, to your team, so you don't get to see the annual reports from the other teams. At least I don't think you do. So the rankings, I don't use their rankings. The round analysis, those types of things. One of the reasons I don't is that I think that it didn't put emphasis on the right areas. It kind of ended up equal weighting some things that I didn't like to have equal weighted. And so I got away from that, and maybe they've changed it in the last year or so. I haven't looked at it for a year or so. Bless you. Okay, the analyst report, same thing. I don't really spend a lot of time. The Courier, we will spend a decent amount of time. You'll spend 90% of your time probably between this and making decisions. The decisions you won't make from the Courier, but if you're smart, what you'll do is if you've got a couple people, one of you will have the Courier up on one screen and one of you will have the decision making up on the other screen, okay, and do it that way. Students used to print out the Courier every time talking about printing. I've had students in the past that they'd get their 3-ring binder and they'd print the Courier out and they'd make notes in it and do all those types of things, and so that's sure something you could look at doing too. If you don't care about trees and those types of things, global warming and all that other stuff. Okay, some important things on there. I'm going to go through the Courier a little bit later, so I'm not going to spend a ton of time looking at that. But it gives you a comparative. You're going to be able to go back and look at all 5 rounds, say for the practice rounds, and when you get to the competitive rounds, you'll be able to go back and look at all 8 rounds of the competitive rounds if you want to. It's kind of nice sometimes to be able to go back and see what you did or what happened. So. Closing stock price is one of the things that you get graded on according to my score sheet. I'm not concerned with the actual stock price. I'm concerned with the change in stock price, and so I score it based on that. The one thing I don't have, it's kind of a failure of mine, is that I base it on a dollar amount rather than a percentage amount. I've thought about fixing that. That would take an effort on my part, but I've thought about fixing that. I may go in and take a look at it and see how difficult that might be to change that after I've built in all these formulas. Earnings per share, huge. I told you guys that. Again, earnings per share is only fair in this case because you guys all start the same. In the real world, earnings per share doesn't matter. It does, but it's not a valid comparison. Okay, it's not a valid comparison because different companies have different number of shares outstanding and whatnot, and so it's just not a valid comparison when you're looking at it out there. Market capitalization. I'll ask you some questions about market capitalization while we go along. Market capitalization is simply the number of shares outstanding times the price of that share. Okay. It's how if you want to talk about what is the biggest company in the world right now, that's how you would calculate it. Okay, generally speaking. So, what do you guys think the biggest company in the world is right now by market capitalization? Got an Amazon, got a Microsoft, or
Apple or Google.
or Apple or Google. Those are all really good guesses because they're probably all in about the top 5. I think that it's probably still Apple. I'm not 100% sure on that because Apple's share price has kind of held steady. It actually dropped down quite a bit. It's bounced back up a little bit. Google may have passed it, but I'm not sure. And Amazon's been up, and it's just been skyrocketing the last couple of years. Okay, and we go back to earnings per share. Amazon makes almost no money. They've barely shown a profit over the last several years. Earnings per share almost zero. Why is the stock value going up so much? Because they're plowing money back into the company. Okay, everything that they do make kind of gets plowed back into the company. Bezos is just, I don't know if he's on a mission to take over the world or whatever. He's certainly on a mission to take over retail, and he's apparently succeeding. Okay, if you look at bricks and mortar retail, it was down this Christmas big time. Target's getting killed. A lot of the other smaller retailers are getting killed. Amazon, right? I can't remember what the percentage was in the increase, but we might take a look at some of those. But bond ratings, I don't get too concerned about, although we will talk about bond ratings some, more because I want you guys to understand what bond ratings are. I know we spoke about those somewhat in finance, not a ton, okay? But bond ratings are important in the real world. It determines how much you can borrow, what rate you can borrow money at. Okay, there are, I think, only 3 or 4 companies in the whole world that are AAA rated. Johnson & Johnson, Microsoft, and I can't remember what the other might be. The United States used to be AAA rated. The United States itself used to be AAA rated. It is no longer AAA rated. So technically, you could buy bonds, purchase bonds in a few companies, 2 or 3 different companies that have better ratings actually than the U.S. government, believe it or not. So again, Microsoft, J&J. I don't think Apple's even AAA. I'm pretty sure they're not.
The top 10 companies, according to
By market cap?
according to the Fortune 500, by their annual revenue,
Oh, that's revenue. Go ahead.
are Walmart, State Grid, China National Petroleum, Sinopec Group, Royal Dutch Shell, ExxonMobil, Volkswagen, and Toyota.
Yeah, by revenue, which is a whole different concept than market cap, right? Why is Apple worth a lot more than Walmart? Walmart, in terms of sales, has probably about 6 times more, I think, in sales than Apple, because Apple's got a huge gross margin compared to Walmart. Walmart's gross margin's, paper thin, right? They sell $500 billion worth of crap every year, but they got a paper thin margin. Apple, on the other hand, sells, I think, $75 billion worth of stuff every year, but their margin is 40% or something crazy like that. So,
According to market cap, it's Apple, Google, Microsoft, Berkshire Hathaway, Amazon, Facebook, ExxonMobil, and Johnson & Johnson.
so we were right there. You guys pegged, I think 4 out of the top 5 there. So good job. Junk bond versus regular bonds, again, isn't that meaningful in our game. Okay, you'll see rates change a little bit, so you guys will. If your rating comes down, your interest rate, your particular team's interest rate is going to go up a little bit. I haven't seen that be a big impact overall on the results of the game. Okay, I'll let you guys decide that, though. Some people are just inherently really nervous about leverage. Okay, my position on leverage, by the way, is this: personal leverage sucks. You should never borrow money for anything personally. Business leverage is a really good tool. Okay, I shouldn't say you should never borrow money for anything. You should only borrow money personally that is used to make money. Okay, you should never borrow money otherwise, like credit cards and that kind of crap. Bad news. Okay, if you're using it to buy things that are going to make you money, okay, borrowing money for cars, horrible, right? Car depreciates in value, boom. 5 years later, it's worth nothing, right? You've been paying $500 a month for this car that's worth nothing, right? Put that $500 a month into your 401k or your IRA. 5 years later, it's worth, I mean, you've put in $500 a month, $6,000 a year, 5 years, 30 grand, but with earnings, it's probably going to be worth 45 or 50 grand, right? Versus a car then that's worth nothing. So, sorry, I digress. I do preach a little bit on some of that stuff. So, cash flow statements are important. We're going to get a lot of information from the cash flow statements, okay, and understanding how they read. Sometimes they read a little differently, you know, than looking at an income statement or a balance sheet, you know, because you get decreases in cash flow. Well, you know, what happened there? And so understanding those things, especially in some of your accounts, like your accounts receivable, inventory, things like that, right? Okay, inventory goes down, that's a good thing. Cash flow maybe went up as a result, right? Accounts receivable go down, okay? That may not be a good thing, okay? Because your sales might have gone down. That may be why your accounts receivable went down, right? So you got to kind of look at these things and think them through, each one of them through. Okay, and I'll definitely ask some questions about those types of things. The income statement, again, we'll spend a lot of time probably looking at those things. Production, I'll look at these things when I get to the Capstone Courier and kind of show you guys. We will, when there's blue here like this, and the blue is at least as long as the yellow, which it is overall here, it's longer, okay? That means there's lots of excess capacity. You'll hear me say excess capacity a lot probably this semester. So, ideal inventory position, okay? Do you want inventory left over? Yeah, ideally you'd have one piece of inventory, right? Okay, hardly ever happens that way. Worst thing is to miss out on sales, millions and millions of dollars of sales, and that happens. Okay, I'd rather have 1,000 units of inventory left over than miss out on 1,000 units of sales. Okay, because you can always sell that inventory that you have left over, right? But you miss a sale, it's gone forever. So, the market segment analysis, we'll kind of look at those things. You'll be looking at this, the actual versus potential. I think that there's some cool stuff that kind of comes out of that. This customer buying criteria, again, I cannot emphasize that enough in each and every segment, okay? In each and every segment. And there are different things in each segment that are important, right? Okay, when you're in the low end, price is important, is the most important. When you're in the high end, price is not all that important, right? We're more concerned about positioning when we're in the high end, okay? So those things you really got to keep in mind. This is, remember up above I said there's actual versus potential that you're going to look at by the segment, and it's a nice graphical look at it. When you get down here, it's actual a numerical look at it. Okay, so it's kind of nice to see it graphically up here, but then if in the questions that I'll ask you, because I'll ask you a lot of questions about actual versus potential, okay, I'll make you do a lot of math when it comes to actual versus potential. You'll come down here to get the real numbers, okay, for the actual versus potential. And again, on the Courier, I'll show you guys that. It'll be a little bit bigger. The perceptual map. When I first started using this years ago, I didn't hardly pay any attention to the perceptual map because I'm a numbers person. I'm not a visual person. I just like to see numbers and do that kind of stuff. I've gotten so I'm a little bit the opposite. You know, the perceptual map really gives you down and dirty look at where everybody's at. Okay, by about round 3, we ought to be able to look at the perceptual map and try to figure out what if they're doing it right. Okay, what a team strategy is. Okay, you should be able to, if that team is doing their job correctly. Okay, if they are actually pursuing their strategy, you ought to be able to look at this perceptual map and have a good idea what their strategy is. So when I get to round 3 and I can't tell by looking at this, what a company's strategy is, I'm kind of going, yeah, wonder what the heck they're doing. And usually they're failing. Okay, so if I can't tell what your strategy is and I look at this, you're probably in, last place or second to last place or something like that. Okay, so it's really, really important to concentrate on what your strategy is and to pursue that strategy. Okay. They do have perceptual maps too for each segment. When you look at those, when you look at the Capstone Courier, my eyes aren't good enough. I can hardly sometimes see because it's a lot smaller picture. So I usually scroll down at the Capstone Courier, get a little further down, and there's the big one that has all of the segments put together. I can usually see it a little bit better. But it talks a lot about here too, about the inner circle and the outer circle. If a product gets outside of this outer circle, it's just simply not going to sell. Okay. Now you get a lot of crossover, obviously, especially here at the beginning, and you'll see that at the beginning. You'll see products selling in both segments, because like these ones here, right? They're right between both segments in the main area, right? So they could easily sell in both segments. But this spreads out. Okay, it spreads out, and so getting your products properly positioned is going to be really important. Okay, nobody here is at the front edge. Okay, so if you're in the high performance and size and you're not out here in the front edge, that'll make you a little bit nervous. HR, something you'll look at. Again, you get to by round 2, is it 2 or 3? You get to spend money on recruiting, training, those types of things. That will change your productivity, which is, it says productivity index. That doesn't look right. Yeah, it's not letting me go down. So we'll look at it on the other one and see if I can show you a little bit better. It does it as a percentage, and 100% productivity is where everybody's at. As you spend money on HR stuff, you can increase that. Okay, maybe 105%. So that means you get 5% bonus productivity. You need 5% fewer employees. I saw a gal the other day who was a student in this class about 6, 8, I don't know, maybe 10 years ago. She's working here in Havre still. Now again, she left and came back. But anyhow, I remember she was on a team. And back then you got to choose the number of employees that you wanted. Okay, so you could actually have, you don't get to do that anymore, but you could actually have excess employees. And her team had chosen a strategy, I think it was a low cost niche. And they had really done a bang up job. I mean, they had just spent a lot of money on different things, and so they were really getting their costs down. But they always had excess employees. And I said, well, what's going on? I said, how come you guys always have these excess employees? And she goes, oh, I just couldn't bear the thought of laying them off. I said, it's a game, for crying out loud. So it was funny. And she wouldn't. I mean, even after we had that conversation, the next round, they didn't lay off any of the employees. Okay, I think they might have lost a round or two because of that. So, you'll see when you get to the Capstone Courier, or the decision, I'm sorry, I'll show you that too, that there are some hints that pop up, and they're really, really important to pay attention to. I'll show you those when we get there. Again, the annual reports that you guys will get will be specific for your team. Really, really important. It breaks it down by product, and so you'll know where you're making your money and where you're not making your money. That can really help you make some decisions, because it allocates your administrative costs and your other costs to products and those types of things. They really do a pretty good job, and it's really worthwhile looking at. Same format as the pro forma. The pro forma is going to give you an idea. So that's going to be an advanced look at your budget, basically, right? Is a pro forma. So we're going to get to look ahead. After we've made all our decisions, we can come and look at this pro forma. Again, that's kind of a nice what if thing. So you can go, you look at your pro forma and it says, oh, you're making $1 million. Geez, we want to do better than that, right? You go back, you make a couple decisions, maybe you're making $1.5 million, right? We can still do better than that. So you can go back and change some things, okay? Keep in mind that the pro forma is just guessing. Okay, it does not know what the competitors are doing, so it's just based on projections that you or the computer are making. And you have the ability in the marketing to kind of change the forecast if you want to. That would change the numbers on the pro forma. Again, it's a really nice what-if tool. There's your income statement, what it looks like, breaks it down by product, you know, tells you administrative costs, different things like that. Nothing there, not, oh, I should go back here. Their help site's pretty good, okay? They're not going to, if you're losing, if you're getting your butt kicked, they're not going to help you make decisions and things like that. But if you do have some problems with the game itself, if you want to get some ideas, they might give you some ideas, okay? And their help site's pretty good. And so don't be afraid, you know, to have this number. It's available right at the CapSim site. But don't be afraid to give them a call occasionally. My experience with them has been bang up. I mean, when I've called and had a problem, they're usually really, really good about getting back to me or answering the phone and getting to me. I might get through easier because I'm an instructor. I don't know, because you know, if you're an instructor, press 1. If you're a student, press 2. I don't know if instructors get through faster than students, but I've never had any problems really. Never had a long wait getting through. So don't be afraid to use their support thing. Okay. Then I said, let's go take a look at what the your guys' looks a little bit different. I think on your left side it just says reports maybe. I'm not 100% sure. I got to come here and click on reports. You won't use a ton of these. Okay, student database obviously you guys don't have. You guys might not even have some of these. I'm not sure. Okay, annual report you will have some access to, but the courier. Okay, and what will happen, you see we got a round 0 here now. It'll just keep adding the rounds, and so you'll be able to go back to round 0 anytime if you want in the practice rounds. But it'll add the rounds, and so you can click on those as you want to. This takes a lot longer to download, but I'm going to click on it just because it makes it's a bigger format. You guys should be able to see it a little bit better. Maybe. If it comes up. There we go. Oh, let's see. How do I make this one go away? I forget. There's a way.
There you are with the arrow pointing that way.
Oh, there you go. Thank you. Okay, you can see everybody starting out the same, right? Okay, so this is the start. Everybody's starting out the same. Up above, it just tells us the names of the teams. It doesn't have the folks in there. I don't know why. I think I've assigned you guys. So, but we're all the same. The things, okay, return on sales doesn't usually get my heart rate up too much. It can be important. Don't get me wrong. It's a nice comparative. But I don't, as a shareholder, I'm not terribly concerned about that. It kind of gets back to the Apple versus Walmart comparison. You know, Apple's going to have a huge return on sales. Walmart's going to have a very low return on sales. Okay, it doesn't mean Walmart's a bad investment, right? It just means that they've got a different model. You know, it's apples and oranges, so I don't get terribly concerned about that. Asset turnover, again, it's good to look at. The higher the better. The more you can turn over your assets, the more efficient you are. It's a good efficiency kind of a ratio. ROA in this one, return on assets. What's ROA? So let's go back. What's the formula for ROS? What's the formula for ROS? You guys are going to get tired of hearing me say what these formulas are, but they're really simple, so I want to get them ingrained in your head. If it's RO anything, net income, right? Return on means net income divided by, what's S stand for? Sales. Okay, so if it's ROA, it's what? If it's ROA, assets. If it's ROE, net income divided by equity. Those are the three biggies. Okay, but ROE will be the big one that we use for scoring and whatnot in this class. But the others are worth looking at. ROA was a huge one in banking. Okay, we used ROA all the time. It was a really good apples to apples comparison from bank to bank. It's really not that way when you get to other industries. When you're comparing, you know, a manufacturer to a retailer, yeah, they could be completely weird. It's an okay comparison here, comparative thing here. Leverage, you guys start out at 2. So you know I penalize you at 2.25. Okay, so if your leverage gets up over 2.25, you get a little penalty on my score sheet. Okay, might be worth it. Might be worth it. Okay, a little risky, but always risk and return always go hand in hand. Okay, risk and return always go hand in hand. So the higher the return, the higher the risk always. That doesn't change. That's one of those laws of nature, kind of like the sun coming up in the morning. ROE, love it, right? You get scored based on ROE. Emergency loan. It's good that they're all zeros. You want to keep them at zeros. Okay? You want to keep emergency loans at zeros. So again, when you get to your finance page, at the bottom of your finance page, it tells you what it's estimating your cash is going to be. You know, build a little comfort zone in there, you know, because your projections may not turn out like you hope. Okay, and so build a little bit of a protective factor in there, right? Have a little margin. Profits, obviously, we look at. Okay, and I score a little bit on profits, but you know, a company can be small and have lesser profits and still be a better value for me as a shareholder. Okay, not always, but sometimes. Okay, and a company can be big and have huge profits and be pretty good for me as a shareholder, but maybe not as good to me as a shareholder. Okay, so I'm the shareholder here. I want you guys to keep me happy, and might depend on a lot of different things. What I'm telling you about that is profits are great. You want to drive profits. You want to get profits as well as you can, but you guys might be CFOs too. CFOs, your job then is to also make it look as good as possible to the shareholders. And there's a lot of other things we can do that besides driving profits. And I want you guys thinking about those things. Okay. Cumulative profit. Again, that one doesn't thrill me too much because I'm in the real world. It's what have you done for me lately? And what'd you do last quarter? You guys don't have quarters, you have years. SG&A to sales. These two last ones, SG&A to sales and contribution margin, are huge. SG&A to sales tells us how much money we're spending marketing, those types of things, okay, in order to generate our sales. Okay, this is an efficiency thing. Okay, so we want the percentage to be low. That shows us that we're being efficient. Okay, however, you got to spend money in those areas also to drive sales. So it's a huge trade-off. Okay, and over time, you know, if you can kind of guide this number down and still generate the sales, that's a big yay. How do you generate the sales and guide this number down? Customer buying criteria. Okay. Customer buying criteria. Contribution margin. Okay, you start out. Everybody starts out. I think the guide says 30% is what you want to shoot for. By the end of this game, if you're at 30%, you're just going to get your ass handed to you. Okay, 30% won't cut it by the end of the game. I've seen teams approach 60% and over 60% by the end of the game. Okay, so set your goal higher than 30%. If the guide says 30%, that ain't going to cut it. Okay, it's going to take quite a bit more than that to be successful. Now, I should add that it might depend, because if teams get really, really competitive, you know, if all four of you teams are just butting heads and you're right there and you're beating each other up really bad, 30% might end up being an okay number. Okay, and I'd love to see that. Generally, I'll get a team that pulls ahead of the pack a little bit, a team or two that pull ahead of the pack, and so then they can get their contribution margin way the hell up. And stock market, everybody starts out the same, right? Price is $34 a share, 0 shares, that. Okay, so I got a closing price of $34. I got 2 million shares outstanding. What's my market cap? It's one times the other. It should be about 68, 69 million. They round it off, right? Okay, and it is. Book value. What's book value, and why is book value different than market value? What's book value? This would be questions that I ask. What's the book value of a company versus the market cap? Market cap is, we know, number of shares outstanding by times the price that we're willing to pay. What's the book value? That's the accounting value. Okay, it's the accounting value. So you guys, CFOs, you're actually doing the financial statements. You got assets, you got depreciation, you got those types of things on the balance sheet, right? And you get down there and you got, here's my assets, here's my liabilities, here's my owner's equity. Okay, so my owner's equity divided by the number of shares outstanding is my book value. Okay, generally our market value is going to be higher. okay, generally our market value is going to be higher. Okay, but not always. A company that's not performing well, it could be opposite of that. Okay, a company that's performing well, the price could be, the market value, or the market capitalization could be way higher than the book value. It's very possible. If you looked at the market cap of Apple, the biggest company in the world, okay, their market cap I think is probably around 750 billion, 750 billion would be my guess. Their book value, my guess is probably about 300 or 400 billion. Okay, and the only reason it's so high is because they got $200 billion plus in cash. It's kind of an oddball thing. This chart will grow, right, as we get going. This is going to be your stock price through the years that we compete. Hopefully everything just kind of keeps going up like that, hopefully. Bond market summary, y'all have some debt outstanding, Key?
Apple's market cap is 37.5 million.
It's market capitalization for Apple has to be about 750 billion. Yep. I'll show you in a second. You must be looking at something else there.
I googled it.
Yeah. Just go to I'll show you in a second. Cash flow, right? Here's the cash flow statement. We look at that. Things I'm constantly looking at here. I want to see what my competitors are doing for plant improvement. Are they investing some money in their plant? Okay, and I'll see the number here, and then I can go look at other stuff to figure out what they're investing their money in. I want to see that. I want to see some things up here in terms of maybe how it changes accounts payable, inventory, accounts receivable. We'll look at those every round. I like to look at those. Purchase of sale of common stock, right? If I'm selling stock, raising cash, increasing my equity, I might also be buying back common stock. Okay, that's the purchase of common stock. I can issue long-term debt. There are some limits on that. I can also issue or I can obtain short-term debt. Okay, generally long-term debt you'd issue in bonds. Okay, short-term debt you probably go to the bank. You guys don't care too much about that, but that's generally kind of how it works with a lot of these bigger companies. They get lines of credit set up with banks, but they issue debt long-term, which is the bonds, and that's the bond summary that we saw up here. Okay, and you guys can do either or both. Okay, you can also pay off debt, retire it early, whatnot. Remember, you're going to be short of cash to begin with. So, cash, yeah, you only got 3.4 million. Everybody, accounts receivable. You do have some inventory out the gate. Keep that in mind. You get some inventory coming out of the gate. Okay, your plant and equipment, everybody's the same, right? Your income statement from last year. Okay, boom. Take a look at that. It's kind of neat. Okay, here's the capacity, production versus capacity. Blue is longer than orange. Okay, if the blue is here and the orange is still, or yellow was still where it's at, I would still be saying that we have all kinds of excess capacity. And why is that? Because we can make double. Okay, right? So only if the blue is twice as long as the orange will I stop saying that there's excess capacity. Okay, only then would I stop saying that there's excess capacity. Okay, so we've got tons of capacity out of the gate here, tons and tons of capacity. I spend a decent amount of time looking at this. Okay, this is my production analysis here, and then here's the number version of it. Okay, it breaks it down. It tells me what each company's products are doing, right? It tells me what I got in inventory, what everybody's got in inventory. It tells me how much they sold last round, okay? It tells me what the age of their products are and my products as well, what their MTBF is, the performance coordinates. I mean, it gives me just all kinds of information about what I'm doing. This is what I said when I was a numbers guy and I didn't look at the perceptual map. I still spent a ton of time on this, and I still do. Okay, now the perceptual map gives me a better idea of the positioning and whatnot. But I like this if I'm trying to fine tune it a little bit. And fine tuning it can be really important, depending on, again, how much you guys are beating each other up. Okay. It tells me what their price is, right? What their costs are. Okay, so I get to see what every company is doing, what their contribution margin is per item. The one up above was overall. This is per item. That's really important. Second shift, if they're using it, what their automation levels are, okay, and what the capacity is. This is first shift capacity. First shift capacity. So remember, I double that to get total capacity. So I double that for every team to get total capacity. Huge Spend some time looking at that. Individual segments, okay. You'll see these get really shaken up here because everybody's actual and their potential are equal here, right? Okay, and we're going to see those get kind of wild and crazy. Here's your customer buying criteria for the traditional. It's going to change. Spend a lot of time looking at demand for overall. This is overall demand, okay, and what the sales were, okay. What the growth rate is. You want to look at that. Make sure you look at that every single round, okay, because that tells you what the projected growth rate is for next year. It could change from year to year, okay. Down here it gives us, again, more data about that. It tells me what people are spending on their sales and marketing. I shouldn't say that. Promo and sales, which is total marketing, right? Tells me a few other things down here. So spend a lot of time. And that's the same for each segment. I'm not going to spend a lot of time going through each individual segment. But the customer buying criteria changes, obviously, from segment to segment. So spend some time looking at that. Here's the numerical version of the actual versus, okay, actual versus potential. If you go here, like acre, here it's kind of important, acre sold, acre is your low-end product, but it did sell 3.6% or held 3.6% of the market share actual in the traditional segment, okay? And it had 16.7% of the actual share in the potential, okay? So it matched its potential. It was actually a little bit below its potential, right? Because its potential in the traditional segment would have been 3.7. So you get some products, again, that cross over. We'll sell a little bit in each segment, maybe. Okay. Again, we're not seeing any real disparities here now. We'll see disparities after the first round. Maybe some huge disparities. Hard to say. The perceptual map doesn't look like anything now because everybody's right in the same spot. Okay. But this will spread out. It'll be really cool to look at. HR. Here's the productivity index, as says at 100% now. Okay, I look for that. And I can look up here and see what people are spending. I kind of key in on this one, see where it's at on the productivity. Okay, TQM, that comes in. That could be huge. I'd advise you to go through the tutorials on that, look at the videos and do those types of things. The annual reports, these are, again, it will be specific to each company. I get them for every company. You guys, I think, just get them for yourself, if I'm not mistaken. Okay, the other thing, I know I've taken a little more time than I wanted to, but I wanted to take a quick peek at, at the decision thing, because I want to show you guys those little pop-ups, if it'll let me here. Come on, baby. There we go. Oops, I didn't want to come all the way back to there, but that's all right. Okay, so if I think mine's different than your guys's. Your guys's says decisions right on it, doesn't it? Oh, I got to come down here. I probably got to log into one of your teams. So I'll log into Baldwin. So yes, I have the ability to completely get in and screw up your team. If I could really play havoc with you guys. That'd be a lot of fun, but I probably won't do that. So decisions, if I come here to the web version, okay, brings up this, right? You guys have probably already been in here and had a look at this. I hope you have. If not, you will before the day's over. And I come to decisions. It does tell me performance up here. It gives me reports up here, those types of things. This is the web version of it. I'm going to go to, we'll go to R&D. This one doesn't have, it does, up here. Okay, so if I come up here to the MTBF and it has this little eye thing, I think that's for information, and I click on it, it gives me a little pop-up. Okay, some of these aren't all that important. Some of them may be just amazingly important. Okay, some of them may just be hugely important. Okay, and so you really want to pay attention to those. Marketing, right? Again, these are up here. It's a fairly long read, but it gives you some insight. Okay, it gives you some insight that might mean the difference between success and failure. Okay, and you got 4 or 5 people on your team, so maybe you can divide and conquer a little bit. I don't know, but these things give you a lot of insight, so pay attention to those little pop-ups. I think if you're using the Excel version, it'll be the little red triangle up in the corner, and so I think you hover over that, and it'll give you the little pop-up thing, little pop-up window, or okay. Questions about that? I'll quit then. Those are the things I kind of wanted to show you. Let you guys get in your team and start making decisions. You're going to have Tuesday. I probably won't say anything on Tuesday, so you'll have Tuesday too to make decisions and whatnot. So, but I advise you to get started, start looking at some of these pop-ups and those types of things.